Hi, good morning, everyone. So, welcome to chapter 5. So, officially, we've actually finished the basics of accounting. So, in essence, I think you have a clear idea of what accounting is all about. So, chapter 1 was all about the basics. What would be the ultimate accounting equation that assets will ultimately be equal to your liabilities and your equity? Chapter 2 was all about learning how to bookkeep or the recording process. So from journalizing to posting our transactions. Chapter 3, we delve deeper into certain nuances, particularly when it comes to accruals and deferrals and all of our adjusting entries. And then finally, in chapter 4, this is where we completed the whole accounting cycle with the 9 required steps and also took into account the different types of entries. So now whenever we say like, oh, this is a correcting entry or this is a reversing entry or this is a closing entry, I think naman na we're all on the same page in terms of the basics or the foundation. So with that said, the complexity of 99.1 will start to ramp up naman. So based on the next few chapters. So as you can see, again, so the financial statements is broken down to your assets, your liabilities, and your equity. And honestly, 99.1, aside from the basics, we're also going to be taking a deep dive in each of the asset accounts, with inventory being the very first asset. So we actually have 2 chapters on inventory. So the first chapter for inventory is actually just providing the context. So this is more about like inventory basics. However, I just wanted the class to be prepared na rin today. It's a bit of parang it can get kind of overwhelming, particularly with like the different inventory systems. So I'll try to take it slow, but I'll try to finish rin talking about the journal entries for both perpetual and periodic inventory system. But I really wanted to emphasize sa class na it's really hard to explain these concepts without also asking for your help in terms of number one, making sure na pag hindi nyo na-gets yung lecture, feel free to ask so that we can repeat it. Number two, you can, after reviewing, if there are unclear portions, kindly visit Waygunt in terms of the theory in order to make sure that you can visualize what's happening. And then number three, and this is actually my style in terms of accounting, minsan parang pag yung theory too much na, I always just go back to journal entries. So basically what I do is just answer all the exercises in Waygunt and then I pattern find parang what are the common patterns behind the different questions. So those are my requests for everyone. Because again, this is gonna be a bit of a steep learning curve given that there's a lot of concepts that we need to discuss. Yan. So with all of those admin things out of the way, let's take a look at our lecture overview. So as much as possible, we really want to be aligned in terms of how we're gonna be tackling inventory, right? And again, similar format with our BAA. So first, we broaden our understanding of the business context. So definitely, we're gonna be focusing or deep diving into what we call merchandising operations or merchandising companies. And then from there, basically, we're gonna use it as a launchpad in order to discuss ano nga ba yung mga fundamentals of the inventory system. What are the basics and what are the foundations that you need to know with regards to the various inventory system in general, right? And then we'll move on to mastering how to account for inventory transactions. Now, the reason why it's difficult is because under inventory, you have 2 different inventory systems that some companies use and the others use the other method. So basically, we have 2 types. So you have your perpetual inventory system, and the second would be your periodic inventory system. And then what you can anticipate is that under perpetual, you have around 9 journal entries, sets of journal entries. And then there are different scenarios under each 9. So aside from that, so roughly around 18 journal entries under perpetual and then roughly around 18 entries under periodic. So in total, there's around 36 transactions and therefore, mastery is very important. So for today, my style kasi here is that I don't like comparing side by side perpetual and periodic. So what we'll be doing is that I'll take you into a deep dive in terms of the whole operating cycle of merchandising operations through the perpetual inventory system, because I think that's easier to understand. And then I will pinpoint the differences in the periodic inventory system in the second half of the lecture. And then if we have time, we can again end with analyzing our financial statement. So basically how it all fits together in the accounting cycle, and then the other forms of the statement of comprehensive income. So I think given the time, I'm not sure if we're gonna be able to reach learning objective 5 and learning objective 6, but then we'll try our best for today. And yun nga, like with that said, I'm also gonna be taking my time in terms of explaining the concept. So per each part, kindly let me know if nakakasabay pa so that we're all still in the same page. Okay. So with that said, now that we're clear in terms of the overview, right? Let's again start with the key definitions. So right now, we're gonna be talking about inventory systems, and the ones that use that the most would be what we call merchandising companies, right? So now the question is, what are merchandising companies? And in order to define what it is, it's actually easier to look at the three types of companies that, you know, have a general format when it comes to typical business operations. So you have three. You have your service company, your merchandising company, which is going to be the focus of today's lecture, and also the manufacturing company. Now, a service company, as the name suggests, is just basically a straightforward business. These are the types of companies that render services. So consulting agencies, lawyers, doctors, welders, all of those, wala silang products na binibenta. Basically, what they're selling are their skills or their services, right? So it's very straightforward. You give them a cash, then they perform the service for you. And then after that, basically, bahala na sila kung anong gagawin nila dun sa pera nila, right? In contrast, merchandising companies are a tad bit complicated because what they're selling is not a service, but ultimately what they're selling are merchandises or items for sale, right? So in essence, if you're familiar with a lot of buy and sells, basically this is what happens. So for example, you see a really cool, cute product in Alibaba. Let's say it's like a glow in the dark, you know, moon figurine, right? So basically, a merchandising company would just basically buy from a supplier that moon figurine and then sell it to another customer. So they don't even do any modifications. Literally, I'll buy it for like 20 pesos from China. Papatungan ko ng 30 pesos and then I'll sell it to the Philippines for 50 pesos. So typically, that's what a merchandising company is. And then finally, the third type of company would be your manufacturing. So actually, merchandising and manufacturing kind of share the similarity that ultimately what they do is they sell goods, right? But the difference is, si merchandising company primarily buy and sell lang siya. Si manufacturing, as the name suggests, they manufacture. Meaning, what they buy is not a finished good, but basically they buy parts. So for example, a classic example of a manufacturing would be like Apple, right? So basically Apple, they buy the raw materials, so the parts, the chips, the screen, etc., etc. And then they have a production or warehouse, right, wherein they convert those raw materials into the finished goods, so iPhone, iPad, etc., etc. And then ultimately, that's when they sell their finished goods. So again, it's very important for us to understand that there are three different types of companies. And to be honest, in all of our examples and all of our exercises for the past 4 chapters, we've actually just dealt with one, right? And those would be our service entities, right? So in chapter 1, all our comprehensive problem was about Macy Consulting, right? Si chapter 2, si Kevin Trin, so welding, so service rin. Chapter 3, si Kuono at saka si Bathala Consulting for accruals and deferrals, right? And then finally, last chapter, we went to Thai interior, so parang interior design, etc., etc. And as you can see, there's actually a common theme among all of these companies, that they fall under the category 1. They are service entities. And then you're going to be asking, so why did we start off with service entities? Because honestly, those are the simplest companies to talk about when it comes to accounting. Because they have the simplest operating cycle, and then wala rin silang inventory. As you can see, if you look past our financial statements, mostly cash, mostly accounts receivable, right? And then other equipment if they want to invest in like their machinery, particularly sila Kevin Trin, right? So in essence, that's the reason why we started off as service entities. So now that hopefully medyo nag-soak na all of the fundamentals of accounting, we're gonna take it up a notch and look at a more complex entity that has a longer operating cycle, right? But before anything else, I want to make sure that we're on the same page when we talk about operating cycle, right? So an operating cycle is in essence the time it takes to operate your business. So basically there are 4 steps roughly. It varies from different types of entities, but in essence, basically number 1, it starts off by the company getting the assets, right? And then ultimately they try to convert those assets into something saleable. So be it services or goods. And then once they sell their goods or services to their customers, that could be in the form of a credit in terms of the accounts receivable or direct cash. And then ultimately, the last step in the cycle would be to get cash from your service or your sale. And then iikot siya because you're gonna reinvest that cash in order to get more assets so that you can convert them and then sell them again to get more money, and then it's just one repeating cycle. So in essence, that's what we call an operating cycle, right? And so let's first go to ano bang itsura ng operating cycle for a service entity, right? And it's very straightforward. It's the simplest operating cycle. So number 1, they get assets in order to provide service. So for example, you have Kevin Trin, basically they get cash, right? And since they're a welder, they probably use the cash to get welding materials. And then after nila mag-invest sa welding materials, they can basically sell their service like infinitely. So they can perform the service, right? They can perform the service. And then ultimately, most of the revenues will come in the form of accounts receivable. And then eventually, pag na-collect na nila, it will turn into cash. And then that cash, they'll reinvest in the business. So either they'll upgrade, they'll hire more welders, and then so that they can sell more, and then get cash more, and then reinvest as a one operating cycle. So very straightforward, right? So 3 steps lang, right? And now that we're clear with that, the question is, so what are merchandising companies and how are they different, from the service entities that we've tackled for the past 4 weeks, right? And actually, super simple lang naman yung definition of what a merchandising company is. Ultimately, like what I've mentioned at the start, they buy and sell goods or what we call merchandise in order to, in essence, earn a profit. So important for theory questions that you understand the 2 different types of merchandising companies. You have your wholesaler and then you have your retailers. And they actually have a very direct relationship. So you have your wholesaler who sells to other companies or who sells to other retailers, right? So you have a merchandising company A. If they sell to merchandising company B, C, D, then that would mean they're a wholesaler. Now, pare, si merchandising company B, once they receive from company A, they sell to me or they sell to you, right? So straight to the consumer. Now, they're not called wholesalers, they're called retailers, right? So again, to summarize, there are 2 different types of merchandising companies. One would be your wholesalers that sell to your retailers or business to business, B2B. And then you have your retailers that sell directly to the end consumer or your customers, so B2C, right? And in essence, regardless of their type, what sets merchandising companies apart is that their primary source of revenue would be their sales, right? So in order to get a clearer picture, so we already took a deep dive into what the operating cycle of a service entity is, right? So now, the question is, ano nga ba itsura ng operating cycle for a merchandising company, right? Merchandising. So their operating cycle, again, begins with cash, right? So you get your cash, and then in essence, you purchase inventory. So basically, you buy your inventory from your wholesaler using your current cash assets, right? And then syempre, pag bumili ka, so let's say you brought from China, obviously, there would be a delivery of goods, right? So they're gonna be shipping from China all the way to your location here in the Philippines, right? So basically you receive the goods already as your inventory. So again, for merchandising company, they don't modify the items. Basically, if they buy a t-shirt from Japan, from China, they sell that t-shirt, they don't modify that t-shirt. If they buy a book from someone, they won't modify the book, papatungan lang nila ng margin and then they'll sell it, right? So in essence, you just buy your inventory from a wholesaler because you're a retailer. The third step is you're gonna sell that inventory once you receive it in order to sell to your customers, right? So either the sale can happen as by cash or accounts receivable. So the last step for the operating cycle for merchandising company is that after they have the accounts receivable from their sales, they'll turn it to cash so that they can buy more inventory, so that they can sell more inventory to get more cash, to get even more inventory, etc., etc. So basically, that would be your operating cycle for your merchandising company. So again, kindly take note that they do not need to convert the materials that they receive into finished goods. It's already a finished merchandise, right? So now let's try to compare our merchandising company and our service entity, right? And basically, two things stand out. Number one, the operating cycle of the merchandising company is obviously longer. It has more steps, right? Because again, we purchase and sell inventory. The second major difference between a service entity and the merchandising company is the presence of your inventory, right? So now, this is actually the perfect type of company to introduce inventory. So kindly take note from our chapter 4 discussion that your inventory should be classified as your current assets, right? So again, merchandising companies have longer operating cycles and they also deal a lot with inventory. So now, let's summarize their differences. In terms of operating cycle, merchandising companies have a longer cycle, right? And then service companies have a shorter cycle. Another key difference between merchandising companies and service companies would be their primary source of revenue. So merchandising, it's buy and sell inventory. Therefore, the bulk of their revenue would be sales revenue. And then for service company, obviously, the bulk of the revenue would be service revenue. So coming from rendering a service. And then another major difference would be how they categorize their expenses. Si merchandising company, medyo mag-a-add tayo ng other iteration wherein they categorize their expenses into two. They have what you call your cost of goods sold, which is also an expense. And then you have your operating expenses. So you have two kinds of expenses under merchandising versus sa service company na primarily mga operating expenses lang yan, right? So basically, I think we're all aligned when it comes to the operating cycle and in terms of like the nuances of a merchandising company. Before I proceed to the last type of entity, the manufacturing, kindly let me know if you have any questions. Yeah. So feel free to type in the chat. But if none, we can jump into manufacturing companies, right? So anong pinagkaiba ni manufacturing kay merchandising? Like what I've mentioned, basically there's just one added step for manufacturing companies. So basically again, it starts with they purchase their raw materials from a wholesaler. So basically if you're a fan of Overcooked from Switch, maybe I think that would help in terms of simplifying the operating cycle of a manufacturing. Na instead of buying like a finished good, like a stuffed toy or like a book, what you really buy would be raw materials. So for example, if you're cooking pizza, you have your cheese, your tomato, and your dough, right? So you buy your raw materials. And then obviously they'll deliver the goods to your warehouse or your restaurant, right? And then those raw materials, you turn them into what you call work in progress. So basically in production siya. Meaning you'll have a chef that will chop the cheese, that will, make the dough into the circle or the shape of the pizza, adding the toppings, etc., etc. Pag hindi pa tapos yung pizza, the process is called work in progress, right? And then ultimately, we're in the third step now of the operating cycle, wherein we're converting the assets. So the inventory changes from being a raw material to work in progress. Then ultimately, you'll have your finished good, which would be your saleable good. And then similarly to merchandising, kapag meron ka ng finished good, then you can sell it to your inventory, either cash or credit. And then if accounts receivable, you turn it into cash, right? So the only difference between a manufacturing and a merchandising company is that yung inventory ni merchandising is literally their merchandise. Isang type lang. It's the merchandise that they buy and sell. Si manufacturing, their inventory is actually broken down into three. The raw materials, those that are work in progress, and those that are finished goods, right? So the reason why I'm just highlighting is so that you know what type of companies we're gonna be focusing on. So itong manufacturing, actually this is more for advanced accounting, yung deep dive nito. And don't worry, we're gonna be primarily talking about merchandising companies as the chapter suggests, right? So again, in summary, you have your three types of companies: your service company, your merchandising company, and your manufacturing company. So now, after we've done defining a merchandising company, let's go to the fundamentals of the inventory system. So again, since we're talking about inventories, we should start off with the formal definition, right? So if there's 4 things that you really have to master, these would be the 4. So aside from these 4, you have to master the journal entries for your perpetual and your periodic, right? Pero it would really help if you super understand these building blocks when it comes to inventory systems. So number 1, the formal definition of an inventory. Number 2, understanding what makes the comprehensive income statement. Basically, you have to know what the difference between the gross profit versus net income. Number 3, you have to know the cost flows of inventory systems. And then finally, number 4, you have to differentiate between 2 inventory systems. So ito lang yung overview, but kindly make sure, particularly for the quiz for chapter 5, na super mastered nito. So now, let's go to what is the formal definition of inventory. So like what I mentioned, accounting in general has standard setting bodies. And in the standard setting bodies, they have standards. And each standard, so in each asset has a standard. So for inventory, the asset would be IAS 2, right? Or PAS 2, right? And how they define inventory is that these are assets that are 3 things. There are 3 types. 1, it could be items that are held for sale in the ordinary course of business, or what we call finished goods. Second, those are already in process of production, with the end goal that you want to sell them at the end of the production process, or what you call the work in process. And the third would be the in form of materials or supplies to be consumed, in the form of your raw materials, the one that you buy from your suppliers, right? So again, it kind of looks intimidating with all of the definitions. But again, just go back to like the manufacturing cycle, right? So the manufacturing actually has all types of the inventory. So you have your raw materials in the form of your cheese, your dough, your tomato. And then pag niluluto siya, it would be your work in process. So basically, it's your the process of production. And then finally, you have your finished goods. So after maluto, binake na sa oven, you'll have your pizza, which would be the finished good, which is held for sale in the ordinary course of business. So I advise that ideally you memorize the definition of inventory, but at the very least, you should at least understand that there are 3 types. Your raw materials that you turn into your work in progress, and then your work in progress that you produce in order to have your finished goods that ultimately you hold for sale, right? So this is from the lens of a manufacturing. Now, don't worry. I understand na parang ang daming terms, but don't worry, since we're tackling merchandising company, we're tackling the simplest form of inventory, which would be merchandises. So the good thing about this is no production. Basically, you just buy and sell. So in the example later, we're gonna be talking about like a company that sells light sticks. So basically, parang pandering to like all of those BTS fans, mga Red Velvet fans, mga New Jeans fans, etc., etc. Right? So basically, they're a merchandiser of light sticks, right? In essence, what they probably do is, number one, they buy from a wholesaler the light sticks, so probably from Korea. They get it imported here in the country so that they can sell to Korean fans here in the Philippines, right? So basically, yun lang talaga. So in terms of inventory, we're just talking about one type of inventory, the merchandise. So for this particular example, the merchandise would be the finished good, or the merchandise or the inventory that is the light stick, right? So that formally ends our first building block. So we know the formal definition of what an inventory is. So kindly let me know if there are any questions. So feel free to type in the chat. So if everything's clear, we can now go to the first new ones, right? So, okay, gets na natin what an inventory is. Now, let's talk about the comprehensive income statement for merchandising companies. So going back to the comparison between merchandising companies and service companies, one of their major differences would be how they categorize their expenses. Like what we mentioned, merchandising companies categorize their expenses into two, right? And therefore, our key insight here is that merchandising companies are their expenses are divided into two major categories, right? So under their expenses, they've broken it down into one, your cost of goods sold, which is still an expense, but this particular expense talks about the total cost of the merchandise sold during the period. So basically, pare, may product ka, yung light stick or car, kung magkano yung binayad mo dun sa supplier, yun yung cost of goods sold mo pag nabenta mo na yung light stick. So, for example, I wanted to resell adjustable dumbbells. So, I bought from Decathlon like 5,000 pesos. So, isang pair ng adjustable dumbbells, 5,000 pesos. And then, binenta ko sa kaibigan ko for 7,000 pesos. How would that work would be, the 7,000 would obviously be my sales revenue. That would be the total revenue from the merchandise sold. The 5,000 that I paid initially for the dumbbells would be what I call my cost of goods sold. So 7,000 minus 5,000, so tumubo ako ng 2,000, right? And the return of 2,000 is what you call your gross profit, meaning sales revenue minus cost of goods sold would be your gross profit. So again, let's define. So sales revenue is the total revenue from selling your merchandise. The 7,000 that you earned from selling the adjustable dumbbell. Now, definitely, that adjustable dumbbell had a cost, right? You paid the supplier 5,000, and that would be the cost of goods sold. Now, the next kind of expenses would be your operating expenses. So these ones are not related to buying or procuring the merchandise. Usually, operating expenses are expenses incurred in the process of earning sales revenue, pero hindi siya tied to the cost of the product. So basically, kung may sales salaries ako or insurance expense, those would be your operating expenses. So let's go back to our Cool Ray example when we talked about matching principle. So again, remember that because of the matching principle, in 2021, since we didn't earn a revenue, initially, the costs of making the particular car were initially inventory. And then, nung nabenta na siya, that's when we recognize the expense of 800,000. So just kindly requesting everyone to let's categorize this 800,000. Do you think this would be your cost of goods sold or your operating expense under the merchandising company? So I'll give like a minute or two for people to feel free to just guess your answer. So the 800,000, is it your COGS or is it your OPEX? Right? Okay, so Marco, Clarence, COGS, yeah, COGS. So I see a lot primarily COGS and then some rin OPEX. So definitely parang we have to go back to the definition, right? And basically the definition of cost of goods sold is the total is the total cost of your merchandise sold. So let's break it down. The merchandise that we sold was the Cool Ray, right? The total cost of the Cool Ray would be 800,000. And therefore, this one would be, and I think the class is mostly correct, it's cost of goods sold, right? So we have your cost of goods sold. And one of the important things to take note when it comes to cost of goods sold is that it follows the matching principle. Meaning, we need to match our cost of goods sold to the revenues we generate in a merchandising company. So again, in 2021, when we didn't sell anything, yung 800,000 was initially an inventory, right? And then, nung nabenta siya ng 1,200, that's when we recognized the expense related to the revenue earned. So now, applying the formula, sales revenue of 1,200 minus the cost of goods sold of 800,000. So 1.2 minus 800, our gross profit would be 400,000, right? So basically, ganun lang naman yung comprehensive income under merchandising company. But then, let's derive our comprehensive income statement, right? So how do we do this? Again, let's start with our basics, right? So basic revenue expenses. So basic income statement, right? Our income statement has three major components. Our revenues or our income, subtract your expenses, and then you have your net income or net loss. Now, si merchandising company, maarte sila. Because of the matching principle, they want to break down their expenses into their COGS and their OPEX. So in essence, kokopyahin lang natin. So revenue minus expenses. But the expenses are now two types. Minus cost of goods sold minus operating expenses is equal to your net income or net loss. It's still the same equation. We just broke down the expenses into your COGS and your OPEX. And then you're gonna be asking me, what's the need, right? The need is that under accounting principles, your revenue should always match your cost of goods sold. And therefore, in order to match them, so revenue minus cost of goods sold will give you your gross profit, right? So baka some people would ask, is there such thing as a gross loss? Honestly, I don't think practically meron because you wouldn't sell anything less for less than what you bought it for when you're trying to make a profit on your sale, right? So your revenues should always be higher than your cost of goods sold, the related cost of your product. So for example, the 800,000 of the Cool Ray, no one's gonna sell it for 700,000, right? Kasi lugi sila, right? So in essence, revenue minus cost of goods sold would be your gross profit. And then we just copy the different items. So gross profit minus your operating expenses would be your net income or net loss. So now that we're clear, we can now derive our comprehensive income statement, the second building block. So basically, it's sales revenue minus cost of goods sold would give you your gross profit. The gross profit, you subtract your operating expenses, and then you'll get your net income or your net loss. So you have two formats. So you have two formats. Basically, this equation type or a table format. I suggest na you use the table format. So again, with anything in relation to 99.1, this is an equation that we already gave to you. So let's make sure na we know how to solve for any missing. So for example, pag si COGS yung missing, you have to know how to solve for X in order to figure out your COGS if gross profit and revenue is given. Kapag binigay lahat except si OPEX, you have to be able to know how to solve for X. So make sure na you fully understand the relationship between all five items, right? So for me, my suggestion is you familiarize and master this table. So sales revenue minus COGS would be your gross profit, and then your gross profit minus your OPEX would be your net income and net loss. So to make this more understandable, let's look at an example. So K-Pop Inc. is a retailer that sells K-pop merchandise. And in essence, for the past month, they sold 240 BTS light sticks for 120,000 pesos. So in the course of that sale, they incurred the following expenses. 90,000 to buy the BTS light sticks, and then 10,000 for the salary of their sales clerk. So now, how do we make a comprehensive income statement for this, right? Step 1, we identify the sales revenue or the total revenue earned from selling the merchandise. So, ano ba yung merchandise natin? The BTS light sticks. We sold it for 120,000 and therefore, our revenue would be 120,000. So, 120,000 sales revenue. Step 2, we have to categorize our expenses and identify which among those would be our cost of goods sold. So right now, we have two expenses. The 90,000 to buy the BTS light sticks and the 10,000, the salary for our sales clerk. So you have to figure out which one would among these would be the COGS, right? And obviously, it would be the 90,000 to buy the BTS light sticks. Because again, the merchandise sold would be the light sticks. And then you just look for the cost that we bought it for. So that's 90,000. So 120 minus 90 will give us our gross profit of 30,000 pesos, right? And then finally, we identify the remaining operating expenses, which would be the 10,000 sales to the salary clerk. Ultimately will give us a net income of 20,000 pesos. So before, in service entities, yung COGS and yung OPEX, hindi na pinaghihiwalay. So basically, parang 120 minus 100 is equal to 20. So you still arrive with the net income. But the reason why you segment this, it's super important to understand the gross profit ratio of companies so that you know if they're selling in a proper margin. Yun. So in essence, the reason why COGS is so important is because it upholds the matching principle wherein you match your revenues with your expenses. So the 120,000 that you earned is matched with the 90,000 pesos that you bought the item that you sold, right? So now we're done with the two. So we have the formal definition and the comprehensive income statement. So now let's talk about cost flows. So when I say cost flows, I want everyone to understand that inventory sounds so complicated, but at the end of the day, you just have to visualize a real company or just, think of starting your own business. And in any business, when you talk about your inventory, there are only two things you care about: the quantity of the product and the cost tied up to the product. Again, the two things that are very important in an inventory is your quantity of products and your cost of products. So at every point in time, you have to know, ano ba yung quantity, tumaas ba, bumaba? Yung costs, tumaas ba, bumaba? Parang those costs, should they be categorized as an asset since hindi ko pa nabebenta? Or since nabenta ko na, I have to recognize an expense, right? So in essence, everything, even chapter 6, will revolve around these two basic things: the quantity of your products and the cost of your products. And all of this is housed in the cost flow. So what does a cost flow look like? So basically, let's take a look from a practical standpoint. So again, imagine na si K-pop Lightsticks, tapos na yung first month of operation niya. And after niyang makabenta, literally parang they only have 15 light sticks, right? And then siguro 1,000 pesos each. So ultimately, the cost tied up is around 15,000. Since hindi pa nila nabenta, this beginning inventory would still be an asset, right? So in the month of October, they heard na, oy, magka-comeback raw this popular K-pop group, right? And they were like, I feel like we'll be able to sell around 100 light sticks, right? So kulang na yung beginning inventory mo, right? So the second component of a cost flow, aside from your beginning inventory, would be your purchases. So you go to your Korean supplier and then you buy 85 more units, right? So your beginning inventory of 15 plus your 85 purchase, so you have your 85, pag inad mo sila, right now, after your purchase, you have 100 units at the cost of 100,000. These are what you call your cost of goods available for sale. So gets, at the start, we have 15, and then we had to buy 85 and then now we have 100. Now, the cost of goods available for sale would be our main reference because it gives you a lot of information. The cost of goods available for sale, if alam mo yung 100 siya, if you know the beginning inventory, you'll already know the purchases. So, 100 siya yung available for sale and then you have 15 units, you know that 85 were probably purchased because 15 plus 85 is to 100. Conversely, if 100 yung available for sale and you know you purchased 85, you already know, kahit hindi given, that the beginning inventory units would be 15. And then, since stable yung cost per unit at 1,000 pesos, you know that it's just 100,000 pesos. So now, in the cost flow, what happens to the cost of goods available for sale? There are only two scenarios. Since available for sale siya, either you sold it and therefore you have to recognize a portion of it as your cost of goods sold. So na-expense mo na siya because you recognize a revenue na for 80 of those. So now 80,000 na yung cost of goods expense mo. And then a portion of that would not be sold. So if 80 yung nabenta, then obviously 100 minus 80, the one that's not sold would be 20. So you have an ending inventory of 20 worth 20,000 pesos. That is still an asset because you haven't sold. And we can't recognize an expense without the relevant revenue. So again, the important thing in the cost flow is your cost of goods available for sale. Because from here, you'll be able to tell what are the missing pieces. For example, you're looking for your cost of goods sold. If you already know that your ending inventory is 20 and at the start you had 100 units available for sale, then you know that 100 minus 20, you probably sold 80, right? So cost of goods sold plus ending inventory will total your cost of goods available for sale, and then sa kabila naman, your beginning inventory and your purchases will equal your cost of goods available for sale. So in essence, your inflows will always equal your outflows also. I mean, in the totality, right? Like 15 plus 85 is 100, and then 80 plus 20 is 100. And then the last note for this is that your ending inventory will then be your beginning inventory for the next period. So meaning, itong beginning inventory na to was the ending inventory of period 1, right? So that ends our cost flows. Actually, in terms of theory, we're almost done. And then, so kindly let me know if there are any questions or clear pa naman so far, right? So conceptually, I hope na we're still in the same page in terms of inventory and the building blocks. So now the question is, how do we actually account for inventory, right? And in essence, the thing that complicates everything is that we have two inventory systems. We have two inventory systems. We have perpetual inventory system on the left, and then on the other hand, you have your periodic inventory system. So if you notice the iconography for this, si perpetual, basically you can imagine these are the corporations or the companies that have good automations. Si periodic naman are probably startups, family businesses that don't want to bother with like all this fancy schmancy equipment in order to have a perpetual system, right? But in order to understand, let's take a deep dive into what a perpetual system is. So as the name suggests, a perpetual inventory system contains a detailed record of the cost of each inventory purchase and sale at every point in time. So in essence, every second, every hour, it perpetually updates. It knows the exact quantity. It knows the exact cost of our inventory, similar to what we discussed in our cost flow. And because of this, it's obviously the better inventory system because it provides better control, pero the trade-off is that it's very costly. So you need to invest money in creating a perpetual system for your company. So usually, it's very effective for high unit values, furnitures, and appliances. So given that it perpetually updates, therefore, you're able to record your cost of goods sold each time a sale occurs. Kasi parang isipin nyo parang siyang barcode na parang every time in the groceries kinascan yan, nare-recognize nung scanner yung revenue, pero matalino rin yung system na itong revenue na to, ito rin yung COGS niya every time you have a sale in the grocery market, right? So that's what makes it a perpetual inventory system. Now, in contrast, you have your periodic. So for the people that don't want to invest in scanners and POS, in computer systems, basically, they can just count their inventories at the end of the period. Meaning, para siyang supplies na accrual na parang, ito yung inventory ko at the start, magkaroon tayo ng physical count at the end. And then, kung ano man yung nabawas, yun yung cost of goods sold natin. So, these are the people that find it unnecessary or uneconomical to invest. So, for example, if you're a one-man team, right? Parang, why would I buy a POS for like my light stick business, right? Pwede ko na lang naman bilangin kung ilan yung natira and then subtract kung ano yung nabenta ko so that I'll be able to know the cost of goods sold, right? So the main difference between perpetual and periodic is your recognition when you recognize your cost of goods sold. So that's the major difference. Again, for perpetual, you recognize your cost of goods sold each time a sale occurs. For periodic, you recognize your cost of goods sold only determined at the end of the period, right? So, aside from this, I want to highlight that even though they have major differences, especially when they recognize cost of goods sold, in essence, both inventory systems actually undergo a 9-step process broken down into 3 major phases. So going back to our operating cycle, the major phases would be, number 1, you have purchasing the inventory. Number 2 would be selling your inventory. And number 3 is this ending or closing your books. So you're adjusting and you're closing entries. So under purchases, you have 4 concepts. So purchase, freight, purchase return and allowances, purchase discounts. For sales, you have 3 concepts. Sale, be it cash or credit, sales return and allowance, sales discount. So again, so I hope you can see the pattern. So may pattern, right? So in essence, regardless kung perpetual or periodic, they undergo the 9 steps, right? So nagkakaiba lang sila sa journal entry. So now, let's look at it from a perspective of the 3 phases, right? So in essence, si perpetual, an example of this is like SM supermarket, right? And then si periodic, an example of this is like an IG shop. Let's say you sell like athleisure wear or like branded t-shirts or org t-shirts in the IG shop. Syempre, you don't want to invest in like all those fancy equipment, right? So you'll probably use periodic, and then si perpetual would be like some sophisticated small medium enterprise or even like a big conglomerate like SM. So let's look at the first phase. So when you buy the purchase, actually wala naman masyadong pinagkaiba. You'll also record the purchase of inventory. You'll also record the purchase of inventory. So far, directionally, they're the same, right? Yung big difference will come in when you sell your inventory. Perpetual inventory system records their COGS at each point of sale. So I have sale 1, I'll recognize COGS 1. I have sales 2, I'll recognize the COGS 2. I have sales 3, I have COGS 3. But so that would be for perpetual. So you compute and record COGS of goods sold every time you have a sale transaction. But under periodic, since you don't have the capacity to tell kung ano yung cost or yung quantity of your inventory at any given point in time, you just record your sale. You don't record any expenses related to that sale, right? And therefore, sa end of the period, magkaiba rin sila. Si perpetual, no more entries to recognize cost of goods sold. Pero si periodic, sa dulo naman siya magko-compute and magre-record ng cost of goods sold. Kasi dun siya magko-conduct ng physical account. So again, in terms of periodic and perpetual, their main difference would be when do you recognize your cost of goods sold? Under perpetual, you recognize your cost of goods sold every time a sale occurs. because it perpetually updates. For periodic, you record your cost of goods sold only at the end of the period during a physical count. Kasi wala kang sophisticated equipment. Literally, bibilangin mo and then you'll compute your cost of goods sold. So in summary, the difference would be perpetual, cost of goods sold is recognized each time a sale occurs. Periodic, you have to compute at the end of the period. So that ends our fundamentals when it comes to inventory system. So are there any questions or clarifications for this? Or clear pa naman so far? Kindly thumbs up na lang in the chat if clear pa naman. Okay. So now that we're clear, we can deep dive na to the first system. And like what I mentioned, for me, the easiest way I found to study inventory is that ipa-perfect ko muna si perpetual inventory system. Like, I'll master all of the journal entries recorded to this, understand the underlying business context under perpetual system. And then, after alam ko na yung journal entry kay perpetual inventory system, I'll say, okay, ito yung journal entry ni perpetual. Paano ko gagawin yung periodic based on my knowledge of the perpetual rather than side-by-side comparison kasi nakaka-overwhelm, right? So therefore, basically, ang gusto ko lang talagang i-master natin would be perpetual today. And then hopefully yung periodic, I'll just quickly breeze through it and then we'll take a deep dive of periodic next meeting, right? So yun. So in essence, we go back to the major concept that regardless whether perpetual or periodic system, they go through the 9 steps, right? Broken down into 3 phases. Your purchase phase, your sale phase, and your end of period phase, right? So under the purchase, you have 4. Under sales, you have 3. And then you have your end of period, you have 2, right? So in total, 9, right? So similar to our accounting cycle, right? So 9 required steps, 9 entries, right? And in order to make this easier, let's talk about Toys R Us as our perpetual system comprehensive case study. So, actually, ito, ginawa ko to for my interview for lecture for 99. So, actually, ito yung slides ko. So, during that time, I think kakalabas lang ng Minions movie, but I think it's a bit outdated now. But let's have like a suspension of disbelief. For this case study, I want for you to step into the shoes of the Toys R Us owner, right? And they're looking to sell Minion toys given the popularity of the movie. So now, we're gonna go through the 9 steps or the operating cycle of Toys R Us. Pero each concept, we're gonna flesh out with a journal entry and also all of the things that you need to know in terms of understanding the context. So number 1, under purchases, obviously, the very first thing that you have to do is to purchase your merchandise or purchase your Minion toys, right? So basically, we have this thing called a purchase invoice, wherein it has a lot of contracts and terms. But ultimately, how it affects your books would be, syempre, you bought toys or you bought merchandise. And therefore, your debit or your inventory increases, so debit inventory. And then you can pay for the inventory or for the merchandise either in the form of cash, so credit cash, or in the form of accounts payable kasi umutang ka pa. Like you'll pay later, right? So purchases normally recorded when goods are received from the seller. So again, the document supporting purchases would be your purchase invoice. So now, we have 2 types of journal entry under purchase inventory. The first thing that you ask is, did I pay for it in cash or did I pay for it in credit? If I purchase on credit, then it's debit inventory, credit accounts payable. If it's by cash, debit inventory pa rin, but credit cash. So ang pinagkaiba lang is kung ano yung credit. Umutang ka ba or binayaran mo in cash, right? So let's jump into the example. So we're now in the step 1 of Toys R Us. And they're purchasing from the wholesaler Yuan Kang plush toys from Alibaba, right? So this is a sample invoice. And then as you can notice, there are weird terms, right? There's like terms 210, N30, FOB shipping point, 10-day return. So those we'll discuss later. But what we're interested in would be that they bought the 100 million plushies for 72,500. So bumili sila ng ganito for 72,500. So let's go to scenario 1A. Let's say you bought it on credit, right? Meaning the journal entry would be 1.A. Debit inventory of 72,500 kasi tumaas yung inventory mo with your Minion plush toys. And then you have an obligation to pay it in the future. So tumaas rin yung liability. So credit, accounts payable, 72,500. Conversely, if you bought it by cash, then the journal entry would instead be debit inventory, credit cash for 72,500, right? So again, purchases are very straightforward. Yun. So debit inventory and then either credit your accounts payable or your cash depending on how you paid for it at the onset, right? So the next question would be freight costs. So may nakita tayong FOB shipping point. So what does FOB shipping point mean? So now we're moving on to the second concept, freight or delivery, right? So freight costs talk about your shipping costs. And basically, in your sales agreement, it will indicate who will pay for the freight costs. And the most typical term is what you call FOB or free on board shipping point. So there's two. Free on board shipping point, free on board destination point. So let's go muna to the left side. FOB shipping point means that the seller places the goods free on board the carrier. So in essence, in shipping point, the buyer is the one that pays for the freight cost, right? So again, FOB shipping point, the buyer pays for the freight. For FOB destination point, the seller will be the one paying for the freight, right? So one way na para madali sa akin is that I imagine when does the transfer of ownership begin, right? And for me, if it says FOB shipping point, before pa lang ipadala, nasa buyer na yung ownership ng goods. And therefore, since they own the goods, they're gonna be the ones paying for the delivery fee, right? So sa shipping point, the ownership transfers before the shipment, and therefore buyer pays the freight. Conversely, sa FOB destination point, the ownership transfers upon arriving at the destination, and therefore technically during the delivery, ang may-ari pa si seller, and therefore seller pays the freight, right? So that's the concept behind it. Pero honestly, back in 99, I was just memorizing. Pag shipping point, buyer pays. Kapag destination point, seller pays, right? Yun. And therefore, bakit siya important? Because it will affect our journal entry. We're in the point of view of the buyer. Kasi 'di ba tayo si Minion or si Toys R Us. So we're the buyer. And therefore, if we're the buyer, we only record our journal entry if it's FOB shipping point. If it's FOB destination, since it's seller na nagbayad, wala naman tayong pake kung nagbayad sila, right? And therefore, no journal entry from the buyer. Pero kindly take note na the seller will record a debit freight out, which is an expense, credit cash, right? So in essence, this is what I was saying. In FOB shipping point, the ownership passes to the buyer here. And therefore, pag sakay dito, sa buyer na. And therefore, it's the buyer that has to pay. Versus, the ownership passes here in the destination. Therefore, ang may-ari dun sa van, si seller pa. And therefore, seller pays. Right? So, the one that we need to create a record, our journal entry would be FOB shipping point. So whenever a buyer pays, the freight is considered a part of purchasing the inventory because having it delivered is a necessary cost for the buyer to receive the goods, right? So for example, bumili nga ako ng light stick from Korea and it's 90 pesos, or sorry, 900 pesos. And then I'll sell it for 1,000. It makes sense. Pero if I say na parang, oh, the shipping's 1,000 pesos, I would definitely not sell it at 1,000, right? Parang now, my total cost for that would be 1,900. So I'll probably sell it for 3,000 to earn a profit. So again, if the buyer will pay in order to bring the inventory to its required destination, then it should increase the value of their inventory. So debit inventory, credit cash, right? And therefore, for our journal entries for number 2, you have 2 scenarios. If shipping point, we record a journal entry, debit inventory, credit cash. Kapag FOB destination point, seller pays for the freight. So si seller yung magbabayad, we're in the point of view of a buyer, no entry, right? So let's apply it to our case study. So in July 11, we have 2 scenarios. What if the FOB shipping point or destination point pero 5,250 yung freight, right? Scenario 2A, shipping point. Since shipping point, ang magbabayad is si buyer. Pag shipping point, si buyer yung magbabayad. Tayo si buyer, we record debit inventory kasi tumaas yung necessary cost in order to bring the inventory to us. 5,250, credit cash, kasi you literally pay the freight or the carrier, right? Yun. Scenario B, 2B, paano kung destination point? Kapag destination point, si seller magbabayad. So on the POV of the buyer, si Toys R Us, there's no journal entry. The seller will be the one to journalize a freight out expense, debit, a credit cash. Right? So 2 down. So halfway na tayo sa purchases, right? Now we have purchase return and allowance. So the buyer may be dissatisfied with merchandise received. So pag tanggap mo, either it's damaged or defective, pangit yung quality, or you specified na, oh, kailangan 3 yung mata, or parang, oh, kailangan 2 yung mata ng plush toy, pero 4 pala. So if it's not into the buyer's specification, then you have an option to either return or have an allowance. So when you say purchase return, you literally or physically return the goods to the seller for credit. So meaning, pag sinoli mo, bababa yung cost of your inventory. Pero bababa rin yung utang mo na you have to pay if you paid on accounts payable, right? So same with the purchase allowance na the difference lang between a return and allowance, you get to keep the merchandise physically, but then since pangit yung quality, bibigyan ka ng deduction or allowance. So papababain rin yung utang mo, right? From the purchase price. So for step 3, purchase return and allowance, your journal entry would be debit accounts payable, bumaba yung liability that you have to pay, and then credit inventory, bumaba rin yung inventory mo. Because you have to subtract yung nawala or yung binalik mo or the one that gave an allowance, right? So to make it easier, let's look at the Toys R Us example. So upon inspection of the 100 plushies, you notice na instead of a Minion, you received a B1 and B2 plushie instead. So definitely, this is not up to your specifications. Kasi I don't think the generation now knows who B1 or B2 is, right? So basically, you wanted to return it. So the seller awarded you, sige na nga, I'll deduct 7,250 from your accounts payable. So how do we record the journal entry? Basically, we just use the debit accounts payable because our liability decreased by 7,250. We don't have to pay that anymore because they gave us a defective product. Pero at the same time, my 100 plushies probably lost like 5 or 10, right? So it lost a certain portion. So my inventory went down also by 7,250. So your asset went down, but also your liability because you returned or the seller gave you an allowance, right? That lessened the amount that you have to pay for the inventory. So we go to the fourth and the last concept under purchases. So similarly to an allowance, we also have purchase discount. So in the purchase invoice, you'll see other terms like 210 and 30, wherein, syempre, if it's an accounts payable, the seller would want that you pay as soon as possible. So they include terms for the purchase discount. So 210 means, okay, bibigyan kita ng 2% discount as long as you pay within the next 10 days. Pero N30 means that regardless, you have to pay the whole amount within 30 days. So 210 and 30, meaning if you pay within 10 days, you get a 2% discount. If you pay at day 15, wala ka ng 2% discount, so you have to pay in full. But okay ka pa, you're not in delay. Pero if you paid 45 days after, you're already in delay. So there's a lot of legal implications, right? Yun. So that's the reason why 2 and 30. So now, so similarly with how to count for months, you also have to know how to count days, right? So meaning, what does within 10 days mean? So when counting in accounting, basically you think of IFCL. Ignore first day, count last day, right? So again, ignore first day, count last day. So I think we'll see this in an example naman later. Wherein, so super sagad na yun yung last day na they have to pay. Pero you have to IFCL or ignore first day, count last day. So there are other terms. Kindly familiarize yourselves in Weygandt exercises. So 110 EOM means 1% discount if paid within the 10 days of the next month. Meaning, kuwari September ngayon, if it's September 110 EOM, you get a 1% discount if you pay within the 10 days of the next month. So if October 9, I can still get a 1% discount. You know. So now we have two scenarios, right? Either you don't take the discount and therefore you have to pay the full outstanding accounts payable, or your discount is taken and therefore magkakaroon ka ng bawas sa kailangan mong bayaran, right? So decreases inventory because the discount also reduces the cost of their inventory on how much you were able to procure it. So kindly take note, and this is super important, that the discount should be based on invoice cost, less the returns and the allowances from concept number 3, the one we just discussed, right? So in the two scenarios, if the discount is not taken, it's a straightforward debit accounts payable, credit cash. So you zero out the accounts payable related to that purchase. For if you take the discount, basically you still zero out accounts payable, but then you first compute for the value of discount and you will treat this as a credit to inventory. Again, the reason why is because the amount that you have to pay for that inventory actually decreased. So you'll see it in an example na parang before, buong-buo yung kailangan mong bayaran, but now there's a discount and therefore you paid less and therefore your inventory cost less and therefore your inventory has to decrease. And then the remaining amount is what you have to pay in cash. So for me, for purchase discount, how you write the compound journal entry would be, start with your accounts payable, compute for your value of discount so that you can credit your inventory, and then you squeeze in the cash last for your discount. So what do I mean? So let's say Toys R Us paid its credit terms 210 and 30. We paid after 10 days and paid within 10 days. So if we paid after 10 days, what the remaining accounts payable would be the 72,500 that we purchased less the purchase returns allowance of 7,250 kasi it deducted the amount we had to pay. And our balance is 65,250. So now, it's debit accounts payable 65,250, credit cash of the same amount, right? So binawasan natin si accounts payable, but it's not the invoice price, but it's the invoice less the purchase returns allowance or your outstanding payable balance in relation to your purchase. Scenario 2 is that, what if you paid within 10 days, right? So now, you can get a discount. So again, how do you write your journal entry? First, I will write my accounts payable. From 4.A, I know na my accounts payable is 65,250. Now, the good thing is, I get a 2% discount. So, the next thing, so I have a debit already. So, compound journal entry, this is procedural. So, kindly take note. So, 65,250, I get a 2% discount. So, I get a 1,305 discount. This amount is what I will credit to my inventory kasi bumaba yung kailangan kong bayaran. And then, my cash or the remaining cash that I have to pay would be 65,250 minus my inventory of 1,305 or 63,945, right? So in essence, this would be your fourth journal entry. So actually, we're done with the first phase or summary of our purchase. So there are 4 concepts under purchases. You purchase the inventory. So this is the entry. FOB shipping point is the only time we record. Pag destination point, it's the seller that records, so no journal entry for us. Pag purchase returns and allowance, generally, it will deduct your accounts payable in your inventory. And then purchase discount, if taken, is a compound journal entry. Wherein, first, you create your debit for accounts payable, then you solve for inventory credit, and then you squeeze in the amount of cash. So if gumawa ka ng T account, your current inventory balance is 69,195. Kindly take note na I super appreciate those na nasa exams and sa quizzes and sa exercises. They put dates sa T accounts. It really helps you double check. So just adopted this format so that you can double check na each of the entries were plugged in correctly, right? And then within 10 days. So July 11, ano ba yung within 10 days of July 11? IFCL. Meaning, ignore first day. I'm not gonna say 11, 12. No, I'll start with 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. So 21 actually is the 10 days, right? Versus, if I counted the first day, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So, sagad. So on the 21, you'd think, hindi ka na available na discount. But that's wrong. Because you ignore the first day, you count the last day, right? Now that we're clear, we move on to sales transactions, right? So basically, this is where the matching principle comes in. Na the revenue recognition, we earn the revenue when the goods are transferred from seller to buyer. But because of matching principle, we have to recognize the matching cost of goods sold with our revenue. So some documents would be cash register tape or sales invoice. So similar with purchases, our sale of inventory can come in the form of on credit or cash. The only difference between these two is ito AR, ito cash, right? Pero AR service revenue, so 2 journal entries. Recognize the revenue by debiting AR or cash, crediting sales revenue. The second journal entry will always be to match your cost of goods sold. Since we're in the perpetual system, we recognize cost of goods sold every time the sale occurs. So how do you recognize? Debit cost of goods sold, credit inventory. Debit cost of goods sold, credit inventory. So kapag perpetual, automatic na yan. Dalawang journal entries, debit, AR, cash, credit, sales revenue, journal entry 1. Journal entry 2, match the COGS. Debit, COGS, credit, inventory. Sobrang daming yung best ulit-ulitin yan. So, make sure, super mastered nyo, na you have to recognize the expense with the revenue under perpetual system. So, let's say we sold Minion plushies for 75,000 and the related amount or the cost was 38,450. So, if we sold on credit, it's gonna be debit AR, 75, credit sales revenue, 75, and then we have to recognize the corresponding cost. So after journal entry 1, journal entry 2 would be to match the cost of goods sold. The cost of the 75,000 is 38,450, and therefore debit COGS credit inventory of 38,450. And then scenario 5B, ang naiba lang is you got cash instead of accounts receivable. Next is, syempre, as a purchaser, we were allowed to return. Also, so now we're in the point of view of the seller, right? Pero our customers can also be dissatisfied with our merchandise. So they can also opt to return the goods, or they can keep the merchandise but will give them a deduction or allowance of the purchase price. Therefore, we will have to create two journal entries again for sales return and allowance. Number one, reduce the revenue recognized. So babalik ta rin lang natin. I-credit back natin si AR, pero rather than debiting service revenue, we're introducing a new account called sales return and allowance. And like accumulated depreciation, sales return and allowance is a contra account. But particularly, it's a contra revenue account. So again, what is the normal balance of our revenue? It's a credit. Meaning, if it's a contra revenue, the normal balance of our sales return and allowance would be a debit, right? So ito yung normal allowance niya. So kindly take note na when pag return and allowance, it's SRA, credit AR. And then we have to reverse the COGS related to the return. So debit inventory, credit COGS. So these are the journal entries for concept number 6. So again, debit SRA, credit AR in order to reverse or reduce the revenue recognized. But then since we reduce the revenue recognized, we have to also reduce the cost of goods sold match. And therefore, it's gonna be debit inventory, credit COGS, right? So let's say you sold your product, right? So basically, nakatanggap sila ng plushie na ganito yung itsura. So parang it looks fake, right? So now, some of them wanted to return 7,500 worth of plushies with a corresponding cost of 3,845. So now we have to create two journal entries, right? So basically, it's debit sales return allowance, which is a contra revenue account. The reason why we want to separate it into a new account is that we want to track the amount of returns. Because if mataas yung sales and returns allowance mo, there's something wrong with your procurement, right? So again, the journal entry is debit SRA, credit AR of 7,500, and then we reverse a portion of our cost of goods sold. So debit inventory 3,845, credit 3,845. So, and then finally, we have sales discount also. So again, there's two. Either you take the discount, either your customer takes the discount, or they don't take the discount. So if the discount is not taken, you receive the full revenue. So before, dati ang zero out natin is the payable outstanding. Ngayon, ang zero out natin is the receivable outstanding because we're in the perspective of the seller. So debit cash, credit accounts receivable, pag not discount taken. And then 7.B, discount not taken would be debit cash, and then debit sales discount, and then credit accounts receivable. So ito baliktad. The very first thing you'll solve is the accounts receivable. And then second step, you solve for the discount, and then you squeeze in the cash last, right? So again, same. Your discount should be based on your invoice cost less returns and allowance. So now, we're into 7. So sales discount. So the customers paid for their receivables. So number 1, they paid after 4 days. So hindi na sila eligible. And then the other would be, they paid within 10 days. So eligible sila. So the term is 10-4. So meaning, I'm willing to give you a 10% discount as long as you pay within 4 days. But regardless, M30, you have to pay within 30 days. So 10% within 4 days. What is 4 days within July 26? I think it was sold July 20. So what's 4 days? So naka 6 days na, right? So hindi na pasok. So again, subtract the 75,000 less the SRA of 7.5. So 67,500 yung balance. Therefore, debit, cash, credit, AR of 67,500. And then, if it's taken, Then again, the very first thing that we have to do for the compound journal entry is record your AR, which is 67,500 that we already computed. The next step is to solve for your discount. So 10-4 means 10%. So 67,500 times 0.1. 6,750. Right? So yun. So therefore, your sales discount is 6,750 and then cash of 60,750. So again, your sales discount similar to your sales return and allowance. This is a new account na you haven't encountered. It's also a contra revenue account, right? So if you have to T account all of the summary sales related transactions, you'll have your sales revenue untouched at 75,000. But then you have two debits, your two contra revenue accounts that have a normal balance of a debit, right? So 7,500 worth of returns, 6,750 worth of discounts. So bakit mo siniseparate? Kasi in essence, you can just, pwede mo silang pagbanggain. 7,500 debit plus 6,750 debit minus 7,500 credit will give you 60,750 in net sales, right? And because of this, by introducing these two accounts, I know that 7,500 out of my 75,000 were bad quality products. So that's actually a very insightful thing for an operational manager. Sa sales discount, you'll be able to see na, around 6,750 worth of our customers paid on time. So is this a good thing or a bad thing? Do we like these customers? So that's the reason why we carved them out. So kindly take note na similar with ACDEP, these are contra revenue accounts. So if I ask you, what is the net sales? And if you give me 75,000, that's wrong. Those are gross sales revenue. The net sales is sales revenue minus sales return and allowance minus sales discount equals your net sales of 60,750. So we're in the last of adjusting entry. So despite using perpetual system, definitely at the end of the period, so nasa end na tayo ng period, bibilangin mo pa rin yung inventory mo for control purposes. So now my question is, in your books, meron kang inventory value because of your perpetual system, right? And then you conducted a physical account. Who wins? The answer is the physical count will always win. The physical count will always win. The physical count is more accurate. Therefore, if the physical count is higher, then we increase our inventory, debit inventory, credit COGS, right? And then, pag physical count is lower, we decrease our inventory. So how do you decrease your inventory? Credit inventory. Then obviously, you recognize a cost of goods sold expense, right? So debit COGS. So again, these are the the journal entries for concept 8. Pag physical count is higher, debit inventory, credit COGS. If the physical count is lower, debit inventory, credit COGS, right? So we're in the last phase. So number 8 na tayo. At the end of the period, Toys R Us conducted a physical count. So scenario A, physical count is higher. According to them, 34,590 yung perpetual records nila based on yung mga T accounts nyo, etc. etc. Pero nagbilang kayo and then you have 35,000 worth. So ang susundan natin is 35,000. So currently, it's understated. So now we have to increase our inventory, debit 410, which is just the difference between 35,000 and 34,590. And then credit COGS of 410, right? Scenario B, what if the physical count was lower? What if it pagkabilang 30,000 pala instead? So again, our inventory is overstated because the physical count is more accurate. And therefore, we debit cost of goods sold 4,590, credit inventory 4,500. And then lastly, number 9, you have your closing entries, which is the same. The only difference is, in closing entry number 1, we close our revenues to income summary. But then you have to take into account your contra revenue accounts, which would be your sales return and allowance and sales discount. They normally have a debit balance, and therefore to zero them out, you need to credit them instead. So they're always in the opposite side of sales revenue, right? So isipin nyo na lang, if service revenue or sales revenue nyo to, debit, credit nyo si sales returns and sales discount because it always diminishes that value. So you get your income summary. And then the rest, syempre may cost of goods sold ka sa expenses mo. So these are just the entries. So close the revenue account. So what are the things they close? Sales revenue, SRA, sales discount. Close your temporary debit accounts, primarily your expenses. So we have your two categorization of expenses, COGS and OPEX. And then number 3, we close our income summary to capital, right? So in the end, we've actually hopefully mastered the perpetual inventory system. So are there any questions before I end the session? So again, sorry. So looking at the time, it's 11:30. So I understand na I think that everyone is, parang syempre, it's important na we respect your time. So feel free to step out because I think it's end of class time. So thank you so much for attending. So honestly, I'll still, don't worry, next session, I'll deep dive naman sa periodic. But given na you also have your exercises due, I just want to make sure na maabot ko lang yung periodic entries, right? At the very least. Kasi yun lang naman yung kailangan, right? So I'll quickly go through lang. So again, our strategy was, let's perfect perpetual. After we perfect perpetual, let's just look at the nuances of periodic so that we know how to adjust, right? So again, perpetual and periodic uses the 3 phases. They have the same purchases, the sale transactions, and end of period. They encounter the same 9 concepts. Nagkakaiba lang sila sa journal entry. Let's first identify the first difference between perpetual and periodic under the purchase phase. So basically, these are the 4 journal entries related to your purchases for your perpetual inventory system. So master nyo na dapat yan, right? So now, ano ba yung pinagkaiba ni periodic? Basically, ito yung itsura ng inventory accounts. And as you can notice, actually pareho lang siya. What's the difference? There is no inventory account under periodic upon purchase. Again, there is no inventory account. Yung inventory has different names. Pag nag-purchase ka, purchases tawag. Pero same pa rin, right? Debit, credit. Debit, credit. So debit inventory, debit purchases. Debit inventory for freight in, debit inventory freight in, right? Purchase return and allowance, you credited your inventory, pero rather than inventory, you credit purchase returns and allowance. And then finally, you have debit inventory here, you have purchase discount inventory. So again, kaya kung gusto si perpetual, papalitan nyo lang si inventory ng pangalan. So kung purchase, purchases. Kung freight, freight in. Kapag purchase returns, pero credit to PRA. Ito, credit inventory, PD. So I always write, ano ba yung perpetual? And then, okay, periodic na tayo. Sige, papalitan ko lang yung pangalan ni inventory. So kindly take note na the first nuance is that initially, there's no inventory account. You have different temporary accounts called purchases, freight in, PRA, and PD that have these balances. Purchases and freight in increases your inventory. So every time bumibili ka or every time na nagpe-pay ka ng freight, tumataas yung inventory. And therefore, normally, the normal balance would be debit kasi it will increase also your inventory. Pero like in the example below, kinikredit natin si inventory every time there's a return or there's a discount. So in essence, bumababa si inventory. So you can see that PRA or purchase return allowance and purchase discount can be your contra inventory accounts, right? And therefore, since contra siya, hindi debit yung normal balance niya, credit, right? So I will discuss na lang this later. Pero in essence, when you record the purchase, the journal entry lang would be debit inventory, credit AP, right? Pero here, instead of inventory, ginawa lang purchases. Next, what kind of shipping is it? So since we paid, we know that buyer paid FOB shipping point, right? And therefore, the journal entry would be, we record. So debit inventory, credit cash. Pero now, instead of inventory, under periodic, we just name it freight in. So again, normal balance nito is debit. Kasi tumaas pa rin sa inventory. Next, on April 3, nag-return siya ng merchandise worth 4,000. So, again, pag nag-return, memorize perpetual, debit AP, credit inventory. Bumaba si inventory. Therefore, ibayin mo lang yung pangalan for periodic, debit AP, credit, purchase, return, and allowance. Right? Which has a normal credit account. Right? And then finally, the paid amount due to be to the Raven company. So what are the terms? Is the discount applicable? And what is the invoice cost minus PRA? So going back, yes, the discount is taken. The purchase date is April 5. The terms are 2/10 and the date today is April 15. Let's count, right? Ignore first day. So 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Sakto, 10th day, right? So if you ignore the first day, you'll know that April 15 is within the discount period, right? So now the discount is taken. Now the question is, what is the invoice cost minus PRA? Or in essence, what is your outstanding accounts payable balance for these purchases? So we had an accounts payable of 19,000 and then nag-return tayo ng 4,000 worth. So in essence, bumaba yung 19,000 natin by 4,000. So we have an AP of 15,000. So basically, we got 300 na less than inventory and then the remainder, we squeeze in the cash. So 15,000 minus 300 is 14,700. So ito inventory kay perpetual pero iba lang yung pangalan kay periodic, right? So these are the journal entries. And as you can see, literally pangalan lang yun na iba. Basically, sa periodic, iniisip ko lang, for all periodic or purchases transactions, we just change the name. Purchases, freight in, purchases, return allowance, purchase discount, right? So that's the first nuance. So we're clear na. Alam na natin how to account for both under purchases. Sa sales, ito yung itsura nung, ito yung difference. Honestly, sa sales, pareho lang sila. Pero what's the major difference? We don't recognize COGS every point of sale or every point of sales returns and allowance. So may extra lang si cost of goods sold, inventory, or yung reversal niya sa sales return and allowance. Pero directionally, they're the same. Because, again, highlighting the basic difference, yung cost of goods sold is recorded every time a transaction is sold for perpetual, pero sa dulo pa kasi si periodic. And therefore, hindi natin siya i-recognize, right? So itong dalawa is the one unique to perpetual, pero sa periodic, you don't do that, right? So that's the second difference, right? So there's this company. So basically, they sold. So pag nag-sell ka sa perpetual, you can expect two entries. Revenue recognition, matching COGS. Pero sa periodic, revenue recognition, same entry, pero no entry to match the COGS, right? So that's the main difference for service sales transactions. You paid shipping costs for 30. Basically, pareho lang yung journal entry nyo. Debit freight out, credit cash. So freight out, so ito point of view of seller, right? Yun. So hindi siya inventory because it's just literally an expense to sell out your product, right? And then you have your allowance or SRA. And basically, under your SRA, again, you de-recognize your revenue using the sales return and allowance contra revenue account, and then you de-recognize the COGS associated with it. So yung 10,000 related to the 20,000. On the other hand, pag periodic, yung de-recognition lang of revenue is the same. Pero you don't, again, touch the COGS. Because sa periodic, you only touch the COGS at the end. And then there's a lot of iterations, which I think I'll discuss na lang next session. But in essence, ang difference lang niya is you have your COGS revenue for perpetual. And then lastly, for sales discount, basically ano ba yung outstanding AR mo? You have 57,000 accounts receivable and then nabawasan ng SRA of 20,000. And therefore, you have 550,000 accounts receivable. So, in essence, basically, ang una natin isosolve is si 550. And then, si 550 is subject to a 2%. Ay, sorry, balik pala. Hindi ba ito calculator? So, again, pag ganito, we always, pag compound journal entry, in sales discount, we start with 550 times 0.11. So we'll know already our sales discount is sorry, I got confused. Sorry, it's 550 times 0.02% discount, 11,000 sales discount, and therefore we squeeze in the cash, right, of 539,000. So again, in summary, ang second difference is sa perpetual naman, they recognize COGS every point in sale, right? And then lastly, the third is, when do you recognize your cost of goods sold under periodic, right? And under periodic, you recognize it at the end of the period, wherein we use our temporary accounts to find our cost of goods sold. And honestly, it's the same way when you refer back to your cost of goods sold. Meaning, if yung cost of goods sold mo is missing, how you're able to get this is basically get your beginning inventory, add your purchases or your net purchases, and then ultimately you'll get your cost of goods available for sale. And then your cost of goods available for sale, subtract your ending inventory, and then you'll get your cost of goods sold. So for example, your cost of goods available for sale, let's look at it at a cost perspective. Beginning inventory 15,000 plus purchases of 85,000 will give me a cost of goods available for sale for 100,000. Subtract the ending inventory of 20,000, and then kahit di ko alam to, I'll know that it's 80,000, right? So to formalize, this is how you solve for your cost of goods sold under periodic system. So hassle, right? But in essence, what you're doing is following the cost flow. Let's get the beginning inventory, let's get the net purchases, so that we can get our cost of goods available for sale, subtract our ending inventory, and then ultimately get our cost of goods sold. So for this, kuwari meron kang given na ganito, it's just really filling in the blanks. So, beginning inventory, 40,500. Then ano ba yung mga purchases natin? 447,000. Then you had your returns and allowances of 6,400. Then your discounts at 12,000. So ultimately, your net purchases is 428,600. You add your freight in, which is 5,600, right? And then ultimately, when you add all of those two together, your net purchases or your cost of goods purchase is 434,200. Now we add that to the beginning inventory, 40,500 plus 434,200 will give you your 474,700. And then we subtract our ending inventory count, which is this one, 65,000. And then ultimately, we'll be able to get our cost of goods sold. This is the third difference. So tatlo lang yung differences ng periodic and perpetual. So now you can actually turn this into a journal entry, right? So first, you get your ending inventory. Your ending inventory will be a debit. So debit ending inventory based on count. And then COGS is missing. And then you debit your PRA, 6,400. You debit your purchase discount, 12,000. Then you credit your beginning inventory of 40,500. Then you credit your purchases of 447,000. And then you credit your freight in of 5,600. Merong butas, right? Yung butas na to is actually your cost of goods sold of 409,700. And then same closing entries na siya, right? So same closing entries, C, periodic and perpetual. So to summarize, what are the key differences? Number one, sa periodic, sa purchases related accounts, they just use weird terms like purchases, freight in, PRA, and PD instead of inventory. Nuance 2, we don't record cost of goods sold every time a sale occurs. Nuance 3, we only recognize cost of goods sold at the end of the period, right? So ito yung itsura ng adjusting entry, right? So actually that ends today's session. I think yung two forms of statement of comprehensive income is very straightforward, and I think you can check it in Waygunt. So thank you so much, everyone. Apologies na nag-extend lang, but I really wanted to finish the overview. Don't worry, I think everything will be clear in the exercises. I will upload the handout na rin within the day. Yeah. Are there any questions before we formally end the recording? Okay. Yeah. Thank you so much. So reminders. Number one, super important reminder. our our quiz next Monday will tackle both chapters. Chapters 3 and chapters 4, right? Meaning, tataas yung highest possible score niya. So, expect it to be longer than usual. And then second, kindly watch out for the mechanics. So, I apologize for the class. I really feel bad na we had to change the way that we do the quizzes. Because honestly, I get naman na hassle to have like time-limited exercises or quizzes. But unfortunately, parang some of the batchmates kasi parang after even several warnings, they still continue to cheat. So we will still be finalizing. So kindly check your emails for ano yung final mechanics of the exams. Yun. And then and then I will upload the exercises and the lecture also today so that you can also review it. Yun. That's it. Yeah. So thank you so much, everyone. Are there any other questions before we end? If none, let us end today's session. So if none, thank you so much, everyone. I'm sorry for extending for 10 minutes. And I promise magdi-deep dive naman tayo sa periodic next session. Yun. So I hope you have a great day and also happy weekend. Yun. Thank you.
Bye, and thank you, sir.
Thank you, sir.
Thank you, sir.
Bye, sir.
Thank you.
Thank you.